You know that feeling when you're looking at a company's financial report and you just sense you're missing a piece of the puzzle? Well, you're probably right. Today, we're going to decode something called special purpose financial statements. And I'll show you why the fine print in finance isn't just for the experts, it's for anyone who really wants to understand the whole story. So let's start with a really important question. Are all financial statements created equal? The answer is a hard no. Absolutely not. And that's because they aren't all built for the same audience. See, depending on who a report is for, the story it tells can be completely, and I mean completely, different. And this gets to the heart of the matter in financial reporting. One size does not fit all. You've got to know if you're looking at a report that's made for everybody or one that was custom built for someone very, very specific. Honestly, this is the best way to think about it. A standard financial report, the kind most of us are used to seeing, it's kind of like a Swiss Army knife, right? It's versatile, it's useful for a whole bunch of different people. But a special purpose statement, that's a scalpel. It is a tool of extreme precision designed for one specific user and one specific job, and it follows a totally custom set of rules. So what do we actually call this custom rulebook for these scalpel reports? Well, there's an official term for it, and it's really the key to understanding how this whole thing works. And here it is. It's called a special purpose framework. Auditing standards define it as basically a set of rules designed specifically for what a particular user needs to know. This is not for the general public. Think of it like a bespoke suit, tailored perfectly for just one person, for just one occasion. And listen, this isn't just some abstract theory. This stuff happens all the time in the real world. For instance, a company might prepare financials using tax rules, but only for its tax return. Or maybe it'll show its cash flow to a bank just to get a loan. Or sometimes a government regulator will demand a report in a super specific format. All of these are perfect examples of financial statements prepared using a special purpose framework. Okay, so what happens when an auditor gets asked to sign off on one of these custom reports? Well, they can't just pull out their standard playbook. This is a special mission. It requires a completely unique checklist. You can really break down an auditor's mission here into 3 critical steps. First, they have to decide whether to even accept the job. Like, is this custom framework even appropriate for what it's trying to do? Second, they plan and perform the audit, which means adapting all their normal procedures to fit these unique rules. And finally, they report their findings, making absolutely sure that the special context is crystal clear to whoever reads it. Now, let's just zero in on that first step for a second because it is so important. Before an auditor even really begins their work, they have to ask 3 fundamental questions. What is the purpose of these financial statements? Who specifically are the intended users? And why did management decide this custom framework was the right one to use? It's all about making sure the scalpel is being used for the right surgery. Okay, so all of this work, the custom rules, the special audit, it all leads to the final auditor's report. And if you ever find yourself holding one of these, there is one critical section you absolutely positively have to find. It's basically the key to the entire document. You see, this report isn't just a simple stamp of approval. It actually contains what I like to call a warning label. It's a section that's intentionally designed to grab your attention and tell you, hey, what you're reading is not a standard all-purpose document. This warning label actually has an official name. It's called the emphasis of matter paragraph, and auditing standards require it to be there. Its entire job is to give you a mandatory heads up. These financial statements were prepared using a special custom framework. And here's what it actually looks like out in the wild. This is a direct quote from an example report. Notice how it says right there, the report was prepared for a specific contract. But the real kicker, the real warning, is that last line, may not be suitable for another purpose. That is the auditor talking to you, telling anyone else who stumbles upon this report to proceed with extreme caution. It might just be the most important sentence in the entire document. So why does any of this actually matter to you? Well, because knowing this one concept completely changes how you should read certain financial documents. It's like having a superpower for spotting when a report isn't telling the story you think it is. And here's a really common trap people fall into. Sometimes these special reports actually end up being made public. A regulator might require it, for example. But, and this is a big but, just because you can access it does not mean it was made for you. That emphasis of matter paragraph is your protection. It's the auditor's way of stopping you from using a scalpel when what you really need is a Swiss Army knife. So if you remember one thing, let it be this. Financial statements are definitely not one size fits all. The next time you see an auditor's report, your first move should be to scan for that emphasis of matter paragraph. It's the big, bright signpost telling you these numbers were built for a very specific reason, and it's your official warning not to use them for anything else. So there you have it. You now have a key to unlock a much deeper level of financial understanding. You know how to spot the warning label. The only question left is, what other hidden details in financial fine print are you ready to go out and uncover?